Welcome to another episode of Capital Ideas, where we celebrate the ideas and the innovators who make our lives better and the capital markets that facilitate the ideas. I'm Nick Morgan. I'm the co-founder of ICAN, the Investor Choice Advocates Network, and the co-host of Capital Ideas.
And I'm Dara Albright. I'm the co-host of Capital Ideas and proud board member of ICAN. And today we have with us Omi Bell. Omi is the CEO of Black Girl Ventures, an enterprise that is dedicated to creating access to capital for Black and brown female entrepreneurs. So let's get started. What would you say are some of the key challenges that face Black and brown female entrepreneurs when it comes to raising capital?
Well, thank you, Dara and Nick. So glad to be here with you. There are three main challenges that underserved, underrepresented founders face. Those challenges are access to financial capital, access to social capital, and the ability to hire. And the greatest of those, in my opinion, is access to social capital, those influential networks. Because we've seen time after time through the finance industry, you can get an infusion of capital, but if you don't have the networks to help you grow it or to give you expertise or even employees to be able to help as you grow, then you're kind of stuck still, right? And we've seen founders get infusions of capital maybe too early and then maybe not make the best decisions. We've seen, things like charismatic founders like Adam Newman, who got tons of capital, but just wasn't willing to listen to anyone, right? And so I think but even still, right, like the influential level of network still can sort of bail out those kinds of things. So that's one of the things that underrepresented founders are facing.
Well, I'd love to hear some success stories. So maybe you could talk about some of the great work you've done, some of the capital you've provided or help and assistance that you've provided that has, turned into job creation, for example.
Yeah, 100%. I think first up, before I jump into that, I just want to kind of frame it by saying we're in a totally different day and age right now where there used to be, and I'm just throwing out arbitrary numbers just to give an example of the vast contrast in what we're dealing with. So pre-quarantine, pre-pandemic, we were dealing with, let's say there was 500,000 small businesses, and we were saying, oh, that is the foundation of America, small businesses, and those maybe 500,000 small businesses were employing 400 people, right? That was what we were before. Now we are becoming a country where, let's say, now we have 2 million small, and these are arbitrary numbers just to give you the idea of the difference, the contrast. Maybe 2 million small businesses employing 3 to 5 people, right? Like we've moved to a place of business boom that I think we're not talking about as much in the finance industry, and that is how we're going to handle the need for microfinance. That is that so many businesses have started that people are not going to in the future employ 500 to 1,000 people unless they turn into bigger businesses. And some people will, but most people won't, right? We're not having that conversation yet. And so I say that to say, I think that the work that Black Girl Ventures is doing is now addressing the times that we're in, which is making sure that people can hire, have the infrastructure to hire, and have the ability through their access to capital, capacity, and community to create a business that will withstand time. A couple of our great examples are Sweet Kiwi is a husband and wife duo, Ehime and Michael Egbe. And they had their company, Sweet Kiwi is the organic yogurt company, and we've watched them grow. Or Ehime came through Black Girl Ventures and she pitched at our pitch competition. She also came through in other instances and got access to resources. They went on Shark Tank, got a deal on Shark Tank. And then they were actually my first investment from our donor advised fund. And so the way we look at it at Black Girl Ventures, and they have a small team of anywhere from about 5 to 10 people that they work with to get the work done. And then they also work with co-packers, and different contractors. The way I'm looking at the work at BGV is how can I de-risk these underrepresented founders so that they can be more viable options for venture capital? And then how do I do the work alongside and simultaneously with the investors to keep them afloat as well? So some of them already have venture capital, like Kai Frazier, who she takes people, children on field trips using VR. And the name of her company is Kai XR. She's right now piloting with a school system but the school systems to figure out how she can massively scale her product. She has investment already, has a small team, but those are the kind of people where we want to keep them afloat so that as more investors decide to invest in underrepresented companies and see where we can help de-risk them.
Both of your comments so far lead me to this question, which is one of the things we talk about at ICAN is regulatory barriers that prevent people from doing the kinds of things you're describing. And whether it's your first point about needing to rely on networks to be able to grow a business, or the microfinancing point, one of the things you've been outspoken about that I think touches on both of those is the accredited investor definition and how that might inhibit people below a certain net worth or income level from participating in these. And that's something you've talked about. Can you just comment a little bit about the accredited investor rule and how it might impact what you're doing?
This is a concept that I've talked to and testified in front of Congress about, because it's so important that we start thinking about, we keep using the stat about less than 1%. Okay, less than 2% of women are getting investment. Less than 1% of Black and brown people are getting investment. Okay, well, we can't also say less than 1% of people are actually able to be accredited investors and then think that definition, that the equity is going to somehow appear, right? So I think that there's one argument about, oh, well, investors need to become more equitable and we need more transparency around who's invested in what and how. I think that makes sense, but I also think we need to think about how can we let more people in? What does it mean to open up that door a little bit more? If we can trust people to gamble their money away, then how can we look at more people that we could trust to actually invest and trust them to be smart and financially adept? The definition part of the definition that says you have to have $1 million, or you can have $1 million net worth. When I questioned this around, like, well, where did $1 million come from? Like, why did all of a sudden having $1 million meant you were somehow financially smart? And the response that I got was, well, in the 1980s when this was developed, $1 million was a lot of money. And I'm like, okay. So one, I think like our finance rules don't grow with inflation sometimes. Right? We have the tax codes tend to shift, but when we talk about the hard and fast SEC rules, they're not shifting really easily and simply over time. And it's something that we need to think about, especially if we say, okay, we have now more Black women specifically, more educated than ever. And now women in general, like just reaching different ranks inside of corporations, and we still have work to do there. Then why isn't our finance rules kind of shifting to, well, what does it need to look like now? I think that in the most practical sense is the way I'm thinking about it, right? Like there's a lot to argue about equity and race. And I try to say yes, and in the most practical sense of this, how are we not all innovating as time continues? How is one section of the a portion of our government just staying stagnant while the entire industry of tech and the way we invest in businesses and the way banking may work or alternative access to capital, all of that's constantly innovating while the industry that governs it is not?
That's a fantastic point and very well put. And I think maybe we'll just leave it there. We really appreciate you coming on. Dara, any closing thoughts?
No, that's really great. Really appreciate you taking the time. It's really fascinating. And I'll just throw out a statistic though. There are in this country, what would you say is the percent of companies that are public to private? So what percent of the companies are publicly traded that people have unfettered access to? And what percent of the companies are privately held that only, a certain percent of accredited investors have access to?
Can't imagine, but I bet it's
staggering. It's staggering. It's 99.7% of companies are private. There are only about 4,000 publicly traded companies right now. So when you limit the choice,
it's not a lot of opportunity.
Right. Wow.
Well, thank you so much for joining us, and thank you all for listening to this episode of Capital Ideas. Please tune in for the next episode, and if you want more information about ICAN, you can go to icanlaw.org. Thank you very much.